What's up, everybody? John New for New Finance. We are here again for another lender Q&A session, and this Q&A session is a special one because it is with someone who is a good friend of mine. I've known him for a very long time. He actually was an account executive at one point, then he started a brokerage, and now he really is a true private money lender, utilizing his family and friends, his wealthy net worth individuals, and basically packaging deals for them and filling a niche in the space, which is small balance commercial bridge loans. So if you have a small balance commercial bridge loan, you're going to want to watch this entire lender Q&A. And without any further ado, here's Justin.
All right, you guys, I'm going to kick this meeting off. I'm going to go ahead and share my screen so we can get some context as to where Mr. Landisman sits over at Investor Property Loans. So I want to make sure, can you guys all see my screen right now?
Yes, we can.
You guys see the lender bucket list? Okay, cool. So everybody knows we have several buckets. We placed Mr. Landisman over in our commercial bridge bucket. So each bucket has a set of lenders, about 3 to 6 lenders, and we have him over at the commercial bridge bucket. If you're part of the masterclass already, you have access to this Excel sheet. If you aren't, feel free to hit me up after the call and we'll get you set up. But right now, here's Mr. Justin Landisman. He's with Investor Property Loans. Justin, thank you so much for being on today, brother. We brought Justin on today because he fits a very small private money niche. He's really a ground floor private money lender. He also does some brokering outside of his private money firm. However, I brought him primarily today to talk about his high net worth fund that he's set up to fund all the deals that he can't broker. And so that's how we're going to be utilizing him in our bucket sheet today. So Justin, thank you so much for being on, brother.
Of course. Thanks for having me, John. Hey, everybody. Hope everyone's doing well and that you guys are having a good Thursday. We're almost done with the week. Still got another couple of days to work and bring in deals, though, so don't quit. Just wanted to share a little bit about what we do. My brother and I jumped into the business about 10 years ago. He's on the call as well. His name is Matt. We started working for a direct lender, quickly realized they couldn't do every deal, then started brokering deals, and then started seeing that most banks were able to do, these deals, but there was still a bunch of good deals that were getting, that were slipping through the cracks, essentially. And we really thought these were good clients and good properties. And over time, about 5 years ago, we started using our own funds because we saw the risk to reward was tremendous. We were making 12% and a few points on doing the deals ourselves. And there was a learning curve to learning how to become a direct lender, but we quickly grew past that and to the point where we used most of our funds and we started bringing in other investors. And now we actually have just a really cool way of doing good deals when banks cannot. So for John and his team and many other brokers around the country, we see deals that typically were turned down by banks or that need short-term financing for one reason or another. It's a good deal for us. It's a good deal for the borrower, and everyone's going to win. So I put together a little deck. Do you mind if I share this with everyone, John?
Yeah. You can share your screen right now. And so everybody hear that story. So Justin used to work with me actually here at Velocity. We're really good friends. And he and his brother always ran a brokerage. And, over time, it's a great story. Over time, they start lending their own money. So this is where most of us probably want to be, at least myself for sure. The other Justin on the call, I know he's lending his own money. So love to hear that. And so, yeah, I'm excited to see where you're going to be able to fill the gaps for everybody here.
Yep, here we go. I'm sharing. Tell me when you could see this.
All right, we got you in there, Justin. I can see it.
Perfect. So there's me many years ago. And
you might want to zoom in maybe just a little bit if that's possible.
Let me see if I can
maybe
make
a tad.
this.
I don't know.
Well, maybe I can make it full screen. Hold on.
Yeah.
If it's not full screen already.
And for those of you rolling in right now, this is one of our lender Q&As. We hold these every single week with either a new lender or one of our primary lenders in our lender bucket Excel sheet. So welcome in, James, welcome, Andrew, welcome. Thank you for joining for today's call. just sit back and enjoy. We're going to let Justin talk about his lending product for us so we can add him to our bucket list. And then at the end of the call, or maybe in between, I'm going to be shooting off a lot of questions. And maybe at the end of the call, we're going to open up for others to ask questions or bring up scenarios for Justin and his brother to review. So you got the floor, Justin. Thank you so much.
Yep, we love hearing scenarios. Here we go. So who are we? Matt and I, we have a small team of 15 people. We look at private money or bridge deals on a daily basis. Unlike large traditional lenders that, you have to go through many hoops to get one person to make a decision. It's really us. You're talking to the decision makers. We are the ones that are going to decide if this loan gets done with us or not. So we understand speed is of the essence on most of these cases, and we want to help everyone. We want to help you guys fund a deal so you can make money. We want to help a borrower close the deal for that specific need. And then it helps our end investors because they're able to get a high yield on their investment in the end. But yeah, so we've structured close to or around $1.5 billion in loans over the past 10 plus years. It just comes from direct lending, brokerage, and our own private money fund. And just most of that is working directly with brokers and loan originators like yourself. And then a bit of it is direct with clients, retail. But most of it does come from partners. Our loan products that we're going to discuss today is really that bread and butter bridge loan or private money loans that a lot of people call it. Our terms are typically 1 year. We can go out to 2 years. We do have some, 6-month extension options where we charge a fee. But these are really loans that are being used as a Band-Aid or as just a way to buy time for your client, right? They need to purchase a property. They need to buy out a partner. There's something going on where they can't go to a bank and they need the money right now to solve a good need. We do these loans on residential properties, including primary residences. You'll see that most lenders do not touch primaries when it comes to these types of loans. We do them. Otherwise known as maybe HELOCs or home equity loans. It's not a line of credit. It's a home equity loan. We're tapping into the equity, but it must be used for business purposes. That's okay. Very important. It cannot
Can our brokers, Justin, if you don't mind me interrupting, can our brokers who aren't licensed bring you a deal on these primary residence loans?
They can. So we are licensed in most states. So it's important for them to know that licensing changes in every state. I can't give you a one answer fits all right now because it's state by state and it's loan by loan, right? There's business purpose loans, there's consumer loans, there's so many different types of loans. We're very compliant. You bring us the loan, we'll figure out that and we'll let you know if it's something that fits our box.
Okay, great. Thanks for the insight.
Yeah. And then, of course, we do lots of commercial. Our background started in commercial. We love multifamily, mixed use, retail, office, warehouse. We're not going to do anything that's too special purpose. We're not going to do this super unique property that, no one's ever seen before, a bowling alley, a gas station, a church, a hospital. These are properties that there's too many other deals for us to want to put our investor and our own money into. Something that's tricky like that. The valuation is really the hardest part there. And how long would it take to sell something like that? We talked about seconds. We do seconds on a lot of our deals. People have really good interest rates on their first, especially with primary residences. Most people refied, 2, 3, 4 years ago. And they have rates in the 2s, 3, and 4% range. They don't want to lose that. They've gained tons of equity over the last few years, and they want to tap into that for one reason or another. So they can keep that first, keep that great rate, and we'll put a second on it. Subordinate
Justin, how high do you go on? Are you going to hit your LTV guidelines on your seconds in another slide, or can I just ask you right now?
Yeah, it's going to be on the next slide. Perfect. Some of this is going to be repeated. I just want to repeat so you guys know, but in the end, we're always available. You'll have both of our phone numbers and email addresses. You can reach out to us. But yeah, I'll get into LTVs in the next slide. I'm just
Okay.
trying to summarize kind of these products. But yeah, subordinate financing in seconds, that's the same thing, just a different term. Cross collateralization, huge in what we do. There's a lot of people that, sorry, my screen is shaking. I think the table and where I'm sitting is not
Oh,
the
you look
typical
good.
spot.
It adds
Okay.
effect, brother. It adds effect. You're looking great.
So yeah, cross collateralization. When you have a client that has multiple properties and the LTV, like John just said, doesn't work, which happens a lot. Your borrower is looking for 70% and the deal just has too much risk. And we're at let's just say we're at 60% on this, but they have another property that has plenty of equity in it. We'll wrap it. We'll do a cross collateralization. You have two properties that are worth $1 million each. The borrower wants 300,000 and he only owes like 700 on one, but 600 on the other. I'm not giving the best examples, but we're going to look at the equity that you have in two different properties to get you that total loan amount that you're looking for. Sometimes we'll even do 3 and 4 properties, which is huge. That's for larger loan amounts. We do not like to do that for small little loans. But when it comes to a big deal like $1 million property that you're trying, or $1 million loan that you're trying to piece $1 million together, and you have 4, 5, 6 properties,
Yep.
and you have 200 in equity to tap in here, 300 here, 300 here, 200 here. We can wrap all of that into $1 million loan using all 4 of those
I
properties.
really love that aspect of your guys' product, the flexibility and cross collateralizing, because right now there are a lot of, you already know, office, retail kind of people running out of equity room there on their refinances. So, getting a little bit creative. If they have outside resources, we can bundle it up. So most of our lenders like to stick, in that box of being in first position or maybe a second on a conservative side, but then they don't even hit the cross collateralization. So you're getting into the creative side, which is really nice.
Yeah. And this is nationwide. To hit on it a little further, we do that over state lines, right? That's huge. You have a property in California, you have a property in Arizona. We can cross both of those. We just did one where the borrower had a property in California, Nevada, Arizona, and Hawaii. We did 4 properties in 4 different states on one loan. And then another common situation that I see with cross collateralization, different property types. I've done commercial properties with a primary residence. We can mix and match the properties. There's not many lenders that do that. Most direct lenders are actually securitizing these loans. They're selling them off, and they have to think in the back of their box. Every loan that they do, it has to be able to be sold. It has to fix a box. So they're more conservative. If this is their box, they're actually only doing this because they don't want to get stuck with anything in that gray zone that might fall outside of the box.
You're right.
We're keeping these loans on our books with our partners.
Absolutely correct. So Justin is not capping right now. It's true. Go broker some of these loans if you haven't already done so. They have their in the box guidelines, most of our nationwide bridge lenders, and they're not going to touch resi with commercial or mixed use with commercial. Or a lot of our resi guys only go up to a certain percentage on how much is commercial versus residential. So no, this is good. This is really good to hear, especially the cross state lines. If you ask me, yeah, I mean, we don't have any lenders right now. I think that'll do a portfolio across state lines right now. And if you guys do, let me know. We'll bring them on. But this is a nice, sweet niche here that we do get requests on. So thank you so much for that.
You got it. Yeah. And then there's our loan amounts right there from 250 to 3 million. So for residential properties, let's just get into the nitty gritty. We were talking about LTVs. We typically like to stay around 60 to 65%. For a great borrower with a great exit, we'll do 70, right? That's our limit. We're not going over 70. When it comes to CLTV, it's a little bit more risky. We're going to limit it to 65. So why is that lower? There's the idea behind it is if that primary residence only has a loan for like 30% $1 million property with a great 2.5% rate on a first mortgage for 200, 300,000, they can still tap into another 300, 350,000 with us in second position and not lose that first. But again, There's two loans. The extra risk is we have to float in the situation where they don't make the payment. We have to float that first. We are going to have to start making that first so that we're protected. That's more risky. That's why we're at 65%. Will we go up to 70 in some cases? Possibly. But again, that's kind of what I just want to put in writing right there. Tap into equity without losing your low rate first. We already went over that. That's one of the biggest things that we see today. Cross collateralization, we do that. Purchase, refi, cash out refi, huge. Our rates usually start around 12% right now. 1-year loans, funds have to be for business purposes. I cannot reiterate that enough, right? These are business purpose loans. We're not doing a consumer HELOC where we're looking at tax returns and income statements. This is a very low doc loan where we're not looking at your W-2s, pay stubs, anything like that. And we're not calling your employer to verify that that payment can be made by your income. It's a business purpose loan. We're hoping that the property itself plus the income from maybe other investments or a business that you have is going to be able to pay us off.
How about FICO and seasoning requirements?
Yeah, so I didn't put FICO here for a reason. We do want to see good borrowers. There are cases where we have a borrower with terrible credit, but the story makes perfect sense. This loan is actually going to help them improve their credit outside of this one event that's happening. Once they get their credit improved, they're going to be in a completely different world. They're going to be able to change. They're not a habitual breaker of mortgage payments and stuff like that. It just happened recently. They're in a struggle. Those are the only situations where we're going to do bad credit. Typically, we want to see like 680 plus. But we're working on 2 separate deals right now where someone has credit in the 500s, but the story makes perfect sense. We're doing the loans. We get to hear the story, right? This is not a bank where your rep has to go to their processor, who has to go to their underwriter, who has to go to the underwriting manager, who has to go to the chief credit officer to figure out if this story is going to make sense. No one wants to do that. They're very rigid. We will listen to the story really quickly. We want it summarized. We don't want to hear, a 2-week long story about this and this and this and this. If the story really makes sense, we're going to consider that deal.
Yeah, explain how the fund is set up real quick, Justin, so people can get an idea of your decision-making power here. Because you're not just a rep, right?
Yeah, we're not just a rep. So it started with Matt and I just lending out our own money. Now we have a few really just wealthy partners, family offices that have given us 100% authority on the lending decisions. And we know their criteria for kind of what they want to do, but they've already pledged a certain amount of money. And then we stick to our box. Our box is what we're bouncing everything off of. And if Matt and I both like the deal, then we can do the deal.
And
if
you guys are participating in most of the deals still, right?
We participate in every deal. One of us will have money in every single loan.
Yeah. Roger that. Thanks.
That's
for the
how
context.
we've worked so far. Yeah.
Yep.
We believe in
context for everybody. Small private money shop, similar to as if you and I were brokering our loans. We tell our friends and family, hey, you guys, we know how to underwrite these loans. We see so many scenarios. There's a gap in the marketplace that we can attack as a family. What do you guys say we start issuing some of these promissory notes ourselves? That's essentially what Matt and Justin have done. And they are growing. They're exponentially at this point. And eventually, they're going to be one of those institutional style lenders. But for now, it's a tight knit group. Okay. So that's the kind of underwriting we're working with here, and which is why they're able to do all this kind of stuff, because they don't have note buyers. So most of the lenders have note buyers or people to report to. It's like they have people to report to. It's their small family office. However, it's a different beast, right? No real securitization taking place. So thank you. I just want to give context to anybody who came in a little bit late. Very important for us to understand the workability of these loans. The discretion is a lot better than most of these other lenders that we work with.
Yeah, totally. You hit it right on the head. We're making the end decision. We're your rep. and the chief credit officer and the person funding the deal, all in two people. So yeah, typical scenarios. I just want you to understand, why would someone come to us? Well, they're trying to tap into equity that they have in one of their properties for a down payment on another property. It has to be an investment property. You can't be tapping into your equity to go buy another investment property. I just got that yesterday. I turned it down. Paying off a partner quickly. There's divorce situations. Business relationships that aren't working out, or a business relationship where someone's older and they want to exit their business. We just had a scenario, I don't know, 6 months or so ago. I think Matt can chime in on this if he wants, but one of the partners was getting he knew that the property was worth somewhere around $4 million. He was a 50% owner, and he said, I'll take 1.6 for my half of the business if you can give me all my money in 30 days. I don't want to be a part of the business anymore. I'm getting old, and I want to put my money into this investment that I need to fund very quickly. So his portion was worth 2 million, but the other partner only needed to pay him 1.6. He didn't care. He was making $400,000 in equity. He was able to come to us, show us the story. We understood it. He had great credit. It was an awesome mixed use property. I think it was an office and retail. So it was like a multi-use. Matt, do you remember if that had any residential? I don't think it had residential, but
I don't remember the deal, to be honest.
yeah, we do a lot of deals, but yeah, so this partner he got bought out, and he was super happy. He paid us off in like 4 months.
Great.
So
We
yeah,
need a
let's
lot
go.
of bridge. There are people who just need bridge money. And most
Yeah.
of the institutional private money out there is sitting at, hey, I want to see bridge plus improvements, otherwise I don't want to mess with it. Oh, and by the way, I got to be in first position. So, you're hitting all the sales points. I'm happy with it.
Yep. Big one recently, like it's not recently, it's been going on for about 4 or 5 years, but building ADUs, it is so expensive here in LA to buy a home that people are just building ADUs, and they're able to rent them out to either friends or family members, or put their kids back there instead of having to buy the kids another home because the kids are still in college or they can't afford a home. There's a huge just market in the ADU world that people are taking advantage of, and they don't want to lose their first in many cases. Renovating investment properties, that's another one. So back to the ADU. If you live in a primary and you're going to rent out the ADU, that's something we'll consider. That's an investment purpose. You're using those funds to build an investment. Purchasing a business, operating capital, we already talked about that. Yeah, so that's a residential. I'll get into questions later. I'm just trying to speed through the deck. Commercial. I'm a very casual guy. You guys will hear the way that we take in deals outside of our one inquiry sheet. It's just emails and phone calls. Commercial properties. So multifamily is kind of the bread and butter. We understand multifamily, mixed use, retail, warehouse, industrial. Those get a little bit harder to value, right? The appraisals take 2 to 3 weeks. We do require an appraisal on many deals unless there's already an appraisal and the leverage is really low. We'll accept an appraisal transfer, or we'll use that appraisal. We'll just get it reviewed by an expert that we know really knows that market. LTV on commercial is usually 65% max. That's kind of a hard line when it comes to commercial. Same with CLTV. That's for a good borrower. Tap into equity without losing the low rate first. Same situation. A lot of these commercial loans, especially in apartment buildings, we're in the 4 or 5% range. If there's a lot of equity that they can tap into, they don't want to lose that. Commercial rates have gone up. They really are just looking for a second in many cases that they can pay off quickly. Cross collateralization, same purchase, refi, cash out. Rates on this start a little bit higher in the 13% range, more same 1 year loan term. Yeah, paying off a partner, typical reasons or scenarios, building out units, tenant improvements, purchasing a business, operating capital, buying more investment properties. Those are reasons why people would use our commercial product. Oops. Yeah, so creative lending solutions, just to wrap it all up. Why do borrowers come to us, or borrowers come to us with a need that banks cannot fulfill? We don't have prepayment penalties. Here's some of the highlights. Short-term capital, quick funding. We lend nationwide. We use common sense to make all of our decisions. And we are the decision makers. Yeah. And then here's some of the cool exceptions. I just thought this might be beneficial for you guys. We've used other appraisals on many of our deals. We look at the poor credit people. If there's a clear exit and our loan is going to help them get their credit much better, which opens up, many other solutions, whether it's a DSCR loan or something else. If the only reason was credit, they just need to get out of that. The LTV is low and there's a clear path to an exit. No problem. We would consider something like that. Cross collateralization. Oh, here's a huge one. No seasoning for as is value. There's a lot of really good investors out there who are getting great deals, and banks are really scared of lending off of as is value if someone just purchased a property. For example, you have a guy who just purchased a commercial or a residential property for 400,000. And it really shows that it's worth 600,000. He just got it last month or 2 months ago. Maybe he gave his sisters 400,000 to get the property out of, a probate with a brother or something like that. There's many reasons for it, but we see that the real value is 600. We have lent up to that purchase price, 100% of the purchase price in some scenarios, because it makes sense. We're using common sense. Some lenders, or I would say all real banks, will look at the purchase price or the appraised value. The lesser of the two, go off of that. John, that's huge. I don't know if you see that.
Aren't you worried about the borrower's skin in the game, though? Because if something happens, a market goes upside down or whatever, right? What's their incentive to continue making the payments on that loan? Aren't you a little bit concerned about that?
It all comes down to the equity. The skin in the game is very important. But again, we're using common sense. If somehow this guy got $1 million property and I run it by my in-house, a commercial guy or my in-house residential guy, and he says, yeah, Justin, I've looked at this thing upside down. I've looked at it every single way. This thing is worth $1 million. I don't know how we got it for 600. The guy tells me, well, I figured it out. It was an off-market listing. There was some crazy stuff that happened. I got it for 600,000. That's real. That's not common. I definitely have red flags when I see this situation come in. I would say 9 out of 10 times it's not real. It's not the case. But 1 out of 10, probably give or take 10%, it happens. There's a guy that finds that deal, and we're okay with that, right? Matt, do you have any other
do you have to
examples
see
on
that guy has experience on the exits? Because I think we do get those scenarios.
Yeah, we don't want a brand new person. It depends on the complexity of a deal. If this is a single family home that the Zillow shows a certain value, the Redfin shows a certain value, like let's just say they both say around $1 million, and we get a BPO or a realtor to go there, take pictures of the property, it looks good, there's no issues with it, and he got it for 600,000, I'm going to give him 600,000 for that deal. If he has good credit, if it makes sense, he owns a primary, he, like everything makes sense. Something happened. Okay, 60%. I would buy this property all day for 600,000. Matt, go ahead. Give
John,
me a break for a second.
you were asking, would we consider this deal if the borrower has no skin in the game in this particular transaction? We definitely don't look favorably on that, but we look at the big picture. We analyze, is the actual value there? Is it really worth $1 million in Justin's scenario, and he's buying it for 600? And if that's the case, there's 400,000 in equity that the borrower stands to lose if they don't perform. So we will entertain those deals, and we have entertained those deals, giving them 100% of the purchase price. It does happen. It's seldom, but it does happen. We just need to look at the big picture. We look at every deal. We look at their personal financial statement, their credit report, and look at everything to see and their track record with their existing properties and see, does everything line up? And he's just getting a great deal. If so, yeah, we'll do 100% of the purchase price.
Mm-hmm.
And it's I don't want you to focus on 100%. It's not always 100%.
Right.
It might be worth 700. right? 700, it shows as 600. If everything shows that it's 700, I want to give you that 60, 65, maybe even 70 of the 700 for
Sure.
the best borrower with 6 properties already. You know, he's got all this stuff. That's what I'm saying. It's not,
Yep.
don't focus just on the 100%. Focus on that you're going to get more. That LTV is more if they're really getting a great
Right.
deal for it.
What I'm hearing, since it's a bridge loan, it probably makes you feel more comfortable in those scenarios too. You know, short-term money, you're giving short-term money, who cares necessarily? Because you got all that equity protection. So that's good.
Yes.
You guys, that's definitely unique. So you guys already know that. I don't have to explain that to you. You already know that's
Yeah.
unique, especially since they didn't have to put any money into that rehab, because that's where that skin in the game comes into play. So right on,
Yeah.
brothers. That's good.
Exactly. So here, let's wrap it up. Our philosophy. This kind of came from my brother. He always talks about this. We provide loans that make sense, empowering borrowers to unlock the potential that they see as investors, especially when banks won't. We like good borrowers with good scenarios where the bank just didn't do the deal for some reason. We see so many deals where the borrower sucks and the deal sucks, and they're just looking for private money or a bridge loan. Unfortunately, that's not for us. Just leave those off the table. We're here for the good borrowers and good scenarios with bank really still just came to you and said no for one reason or another, or they need speed, or they need cash out, or the higher leverages. That's what we're here for.
Yep.
We're not here for bad borrowers and bad bailout situations. So the exit strategy, and that comes down to the exit strategy. The exit strategy is as important as the collateral. We always want to know, how are they going to get out of our loan? We don't want to take these properties. This is key. I want everyone to hear, we are not a private money shark or a lending company that's out here to just suck the equity out of a borrower and take that property one day. We don't ever want to do that. We've never even had one 30-day late out of all of the loans that we've done. We want to see up front. We don't want to hope that there's an exit. We want to see what that strategy is. They're going to improve their credit. They're going to come out with a DSCR loan. They are going to take this loan, do some work, or float the first payment until they sell this property that they have listed. It's been listed for 2 days. It's going to take about 60 days maybe to find a buyer, and then another 45 days to close escrow. Once they sell that, there's plenty of equity in the sale to pay us off. There is an exit strategy. It's clear. That's what we need to see.
Wonderful.
Yep.
All right, guys. Well, let's open it up to some Q&A, and then we'll get into exactly how to submit a loan over to Justin. So we've gone over a lot, you guys. So I'm going to open it up. Does anybody have any questions? Feel free to unmute yourself right now if anybody has any questions. And you guys, often enough, people don't want to ask questions, so don't be offended if nobody asks questions. Okay, but. Does anybody have any questions at all? Any scenarios that you want to run by Justin? Anybody asking for second positions? Anybody buying a property recently? They got a deal. They're trying to pull cash out. It's just not happening with anybody. Does anybody have scenarios to run by Mr. Justin? Feel free to shout out.
We have a couple in upstate New York, which according to the sites would consider it rural. Would you look at those?
So we don't look upon rural properties favorably. We will consider them. It depends on how rural it is. I've heard so many different definitions on rural. If I go on Zillow and I can see that there are, let's just say, 5 properties listed within, a small range, let's just say within a mile for sale, and there's plenty of sold properties and it's a single family, something I would consider, right? There's probably going to be, 5, 10,000 people in a city like that. But if it's in a city that has like 17 streets and there's only been one sale in the last 6 months of a single family home that's that size, probably not something we're going to do. We need to see how many transactions are happening there.
Okay.
Gotta have sales comps is what I'm hearing, Mr. Mark.
Yep. And you can even look at the population. I mean, see, look, go on Zillow, zoom in, zoom out, type in for sale, zoom in, zoom out, see, is there data there? And then type in sold or click the sold button, zoom in, zoom out, see what's there. If you can see some stuff and it's not a tricky property, if it's commercial, we're not going to touch it. But if it's residential and there's homes, those are much easier for us to value.
Okay, I'll send one over. That is definitely a good one. The investor he wants a quick sale, get a bridge loan, and he'll refi.
Cool. So he purchased this recently, refied it or renovated it?
One of my clients is selling selling his properties to an investor.
Gotcha. So it's in escrow. He's selling it already.
I don't know if they have a purchase and sale contract yet.
Okay. So who would the loan be for? For the buyer or for the seller?
The buyer.
Okay. For the buyer. Okay.
I have the scenario on it.
Okay. Any other questions or scenarios?
Anybody else have any scenarios?
John, you know about that former gas station. That probably would be too unique for him, correct? Tanks are out, but it is a former gas station. Okay.
Oh, tanks are out.
Not for us.
Do they have a clearance letter?
They have an assessment. It wasn't a phase 1, phase 2, phase 3. But
well, if there's a seller and if there's is it a person refinancing or is this a seller trying to sell it to one of your clients?
I think I sent it over to you, John.
It's a refi. Okay. He's got it. If you got past tanks, you need to just go get those phase 1s and phase 2s. You might as well. So you can.
Tanks were taken out. There was a quarter size of containment, which was removed, and they had to put ventilation in for a year, and that year passed.
I got you. Okay. Well, Justin, how can someone get a hold of you? What's the best way to send you a deal? Get a hold of you. I saw that you had a link up there.
Yeah, I don't even know where my oh, here it is. Let's try and do this.
And everybody, once again, Justin's in our commercial bridge bucket. If you're part of the masterclass, you have the Excel sheet. After this call, I'm going to send a clip of where Justin sits out to everybody on this call if you're in the masterclass. So you'll be receiving that. And yeah, Justin, go ahead.
Yeah, so I mean, here's the link. You can click this submit button. I don't know if you're going to send this deck out, but I made it so
I'll
you
send
can
the
just
deck
click
out.
here.
Yeah, you send me the deck after the call. I'll send it out.
Yep. If you click there, this is it. This is our page. This is where you answer all the questions that we need to really understand the deal up front. I don't like talking about deals and asking questions for 3 weeks. I really want you guys to get all of the information up front that we have requested here on this forum. And then I can start looking at it. I can really give you a tangible idea if we can do this deal or not.
All right. And guys, when you're sending a deal over to Justin, make it clear that you want it to go through his fund. Otherwise, most likely he might ask you, hey, well, we might want to broker this deal. So, make that clear. You guys are all brokers here. We're here for the direct money. I wanted to bring Justin on here so you guys can see a different kind of money that is filling a lot of gaps, especially that secondary market, the secondary liens and the cross collateralization. But make it clear, just say, hey, I want to run it through your fund. If it's not through your fund, let's not go there. Okay.
Yep.
If that's okay with you, Justin.
Absolutely. Yeah, we're excited to hear all of your scenarios. Please go to that form in that link and submit as many as you guys have or want. If you have a question, just call me. We're available.
All righty, guys. Thank you so much, Justin. Thank you, everyone, for being on the call. And this video is going to go out. You guys are going to get the email. So thank you so much. Andrew, Irving, everybody, Justin, Matt, thank you so much for being on the call today.
You got it.
All right,
Have
take
a good
care, guys.
day.
Bye-bye.